Yo, what's going on, everybody? I'm gonna go ahead and give you guys my weekly breakdown analysis. That's basically what I'm gonna be looking for this new and coming week. As you guys know, obviously right now we are on a little bit of a losing streak, which is completely fine. I honestly, losing streaks don't phase me, and it shouldn't phase you either, as long as you have good, proper risk management. If you don't have good risk management, you're probably literally sitting up curled after these previous weeks, and that definitely shows a lot about you. And in terms of your character, you really need to dial down in terms of, are you being disciplined with your trading setups? Are you properly managing risk? Are you following your trading protocols? Things of sorts. Because the thing is, right now we are on a 5 losing streak, and if you're constantly, let's just say we're on a 6 losing streak because it's an even number. Let's just say you're risking 0.5% of each and every single trade setup. Let's just say on a funded account, you're only down 3%. So let's just say you were to come into that 7th trade and you were to hit a 3R, a 4R. Guess what? Now you're back at break even and or a little bit in profit. So if you're not properly managing risk, if you've either blown an account, done this, that, or the third, it all ties down into risk management. And you can tell very easily if your risk management is good or not. If you're down, like I said, a significant amount, dollar amount within your account, then your risk management is very terrible. And or you have the funds that you don't really care to lose, and you are a lot more of an aggressive trader. I know people who go into trade setups 25%, 40%, risking 25, 34, 40% of their account. My bad, I don't know what the fuck's going on, but yeah, they have the capital to do so, right? James Storms, he goes into trades risking 50%. He's told me that he's gone full margin into some trades sometime, and he's still blown accounts, but that's all a matter of because he still has money. But in terms of if you're properly managing a risk and doing it the other way, and you can't fund and supply losses like that, you should very strictly follow trading protocols. Risk management, risking 0.5% a trade, risking 1% a trade. Once you're in profit and you have a good safety cushion, start risking a little bit more, maybe 2% top. The only amount that I've ever risked tops is 2%. But anyways, a little bit of a rant. With that being said, let's just go ahead and get straight into the analysis. Top down analysis, starting off on gold. So right now, as you guys know, we are still very much so bearish. I don't really care about this massive gladiator candlestick that price printed the other day, just because of the fact that if you guys look at overall market structure, we are still bearish. Notice how right now, within where price was at right here, we're in a little bit of a range, and you can start to see market structure shift after it got up to these highs. Notice how price printed this high up here, created a low, lower high, lower low, lower high, lower low, lower high. And notice how price right now is still retracing. We still have this protected lower high right here on our weekly time frame. That price can do whatever it wants within this general area, but the second we start to break these highs right here, that is whenever we have a break in structure within the weekly time frame, from being bearish to looking into being bullish. Now, with that said, right now I am still only looking for sells. Notice how right now where gold is at, we are starting to approach a very strong area of support. When we're trading below it, we got a little bit of resistance right here, a little bit of hesitation, resistance, and support. What is the probability that price melts from this point on? It is very probable, because of the fact that this is a very, very strong pullback. And typically whenever you have strong pullbacks, what happens? You have a very, very big continuation. If price wants to continue, then price can very easily just pull back right here, give you a little bit of a new higher low, and then we have the break in structure right here for the continuation back up. But like I mentioned, right now I'm still very much so bearish. So now that we have our bias set on our weekly, let's dial down into our daily and see what market structure is doing there. So based off of our daily time frame, we are still bearish. Market structure has not broken. Notice how we have a high printed all the way up here. Price gave us a retracement. This high created this impulsive leg to wipe out the previous low. Notice how that we did that. Now, notice how we had a little bit of a pullback right here. This impulsive high created a new low within the markets. Now, come down here. What did price do? We started to retrace again. We still have the protected high up here. Price can retrace as much as all the way to here if it really wanted to, but obviously it never did. Price came up, retested previous structural level of support, acted as an area of resistance, bearish engulfing. Boom, what did price do? It continued all the way down to here. This impulsive high created a new low within the markets. Now, do we have a new lower high within the markets that broke this structural level? No. A lot of people are going to look at the markets and see this as a new lower high, but this impulsive high never created a new low within the market. So there is no valid lower high within the general area, which is why I'm saying this is a protected high, because of the fact that this impulsive high created this impulsive leg to create the new low within the market. So all this is a retracement. there is no break in structure in my eyes until we break this high, because this high is what created this low, and this impulsive leg is what broke the previous low, right? Until then, I don't care what price does within this general area, but as long as we respect this high, I am still only going to be looking for sells. Now, what is our final area that we're going to be looking for sells at? Like I mentioned, break and retest, very simple, support and resistance. Notice how we have a massive swing for about 1,680 pips on gold, risking about potentially 250. If price were to come up into this general area, I'm literally just going to set my limit and just let it go. We're only about 125 pips away before we get into this general area. But like I mentioned, notice how looking left, we have an area of support, 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 a little bit of hesitation, resistance, 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 resistance. What is the probability that price comes up into this general area, gives you a little bit of consolidation, gives you a little bit of liquidity sweep, and then starts to just fucking bleed? Very likely. Now, I'm not saying price can't just absolutely mop up from beyond this point, but at the same time, now we took the anticipated sells off of this level because this is a protected high, and soon after we can just switch our bias. Soon after, we just look for a break and retest for the continuation all the way back up. But like I mentioned, until then, I'm only going to be looking for sells. Now, there's no doubt in my mind that we're bullish on the 4-hour time frame, right? Notice how right here we had a continuation to the down. So let's just start from this impulsive move. So notice how we had it push to the downside, push to the upside. We had a little bit of retracement, push to the downside, push to the upside. We had a little bit of a range right here. A lot of people would call this as a pullback. Whether you want to call it or not, let's just say that in this circumstance it is a pullback. Notice how price came up, created a new low within the markets. We had a continuation, and then what did price do right here? We broke market structure. We gave you a little bit of a pullback. Notice how price came all the way down. We respected these lows, but price never gave us a new high. So where could we say that the previous higher low was? Right here, because like I mentioned, we respected these previous lows, which would cause this impulsive movement to the upside. Now notice how we did that, and then soon after, obviously price continued to buy back up. Now price can very easily do the same thing that it did down here up here, because like I mentioned, based off of our daily, based off of our weekly, we are bearish. So coming into this, all I'm looking is for a very simple candlestick variation setup, or breaking structure within the lower time frames to go ahead and take my sells. I'm already anticipating the sells off of this level. What am I going to be looking for? Some sort of a break in structure, right? We're going to start to range just a little bit within the lower time frames. We might have a little bit of liquidity sweep, and then soon after, price is then going to create a new low within the markets. We can anticipate this retracement right here, and then look for the continuation from that point on. Or you can very easily just set a limit within this general area and have your stops up above this previous high, because like I mentioned, you know that this is a protected daily high, and a second that price starts to break these highs, we have officially broken market structure within the daily time frame, right? So that's gold. It's going to be the same exact thing for US30. Hopefully that made a little bit of sense. I know I went a little bit more in depth onto that. You can expect for breakdowns to be happening like that within the boot camp. I might actually honestly post this out on the public chat. We're gonna see if I want to post this breakdown on the public chat or not, because there's a lot of value within this, and a very big move to obviously catch right here, about a 6-7 R. You can very easily tighten stop losses just a little bit if you really wanted to, but anyways, that's that. Coming into US30, we'll just see if I want to or not. Obviously, we took some short positions right around this general area, and then price absolutely obliterated us with this gladiator candlestick whenever news got released. It's completely fine. I'm not really worried about it, but it's the same thing here. Let's analyze US30 off of the weekly levels. Notice how right now we were in a bullish market from this point on, obviously creating higher highs, higher lows, higher highs, higher lows within the markets, higher low, higher high, higher low. We had a little bit of liquidity sweep, and then soon after, notice how this high right here created a new low within the markets. We had some sort of a break in structure. Guess what? Now we had the pullback for the new lower high. Notice how this lower high then created a new lower low. We are officially bearish. So now what is price doing? We are constantly creating new lower lows and new lower highs within the markets. Notice how price created a new low off of this impulsive move right here, making this the new protected high. Price can very easily, like I mentioned, retrace all the way back up into this general area before the continuation back down. Support and resistance lines are just the basis of where you can expect price to basically turn, but you got to keep in mind that these hedge funds and all of these other smart money people, that if you want to get a little bit more technical, whatever you want to call it, let's just say the banks, hedge funds, right? All they're doing is trying to absolutely rail the retail trader. They're trying to fuck your account, right? So with that, you tend to have a lot of fake outs. You tend to have liquidity grabs just like this one alone. Notice how this wick right here created a stop hunt right here within this general area, basically stopping out a lot of the sellers. And soon after, obviously price continued to sell down. What is the probability that price comes up into this general area? makes everybody's bias switch to being bullish, and then from that point on just completely bleeding. It's very, very probable that price can do that. As you guys know, I'm a very much so break and retest trader. But yes, we have broken out of this trend line right here. Yes, we have broken out of the support area right there. If I were to take buys on this general area, I want to see price commit above this level. I want to see price come up, give me a retest for the continuation of buys. If I don't get that retest, I'm not looking for buys at all. Notice how this example right here. Notice how we created this level of support, price closed down below this general area of support, and then soon after price printed straight back up into that general area, creating a fake out, right? Notice how we never got our retest within this general zone. Why am I going to look for sells if I never got a valid retest off of this level right here to continue for the short? Soon after, like I said, price continued to buy up. We never got the retest within this general area. What is the probability that price does the same shit right here? We create a top wick right there, and then we basically print a bearish engulfing candlestick and start trading down below. If you want to be a little bit more passive with the trade setup, cool. You can wait for price to break down below this general area, give your retest and the continuation back down. If you want to be a little bit more aggressive, which I wouldn't even call it aggressive because of the fact that you're going to have stop losses set at previous protected highs, which is going to be our weekly, right? So same thing with US30. I'm still only looking for bearish moves, not to mention inflation is still not fixed. Whenever FOMC comes around, they're going to hike interest rates yet again. Yes, they are helping, but have we completely killed inflation? No, we have not killed inflation. So with that said, fundamentally, I'm still bearish on the stock market in general as a whole. I'm fully expecting the stock market to come down all the way to 26,000 general area, definitely come down and tap into these lows about 28,700 within the next few months. Today is November 13th, and I'm going to be quoting this for whenever price actually comes and hits this general area. November 13th, today, I'm expecting US30 to come and continue crashing down. One of my first areas of interest is going to be 29,000, 28,000. My long-term target is going to be all the way down here into 26,500 ish area. So anyways, with that said, I'm going to come back, reflect to this video, and talk shit on social media, right? Coming into our daily level, let's analyze basically off of what the daily is doing. It's the same exact thing. Market structure and everything as a whole is still bearish, right? Notice how price came down, created a low within the markets, created a new lower high, lower low. Price came up. It failed to make a new higher low within the markets. A lot of people, I guess you could call this a new higher low right here. I wouldn't really identify this as a new higher low, but let's just say you did. This higher low never created a new higher high within the market. So why would you want to continue looking for sells within that general area? Not to mention, we're just floating in the middle of a range. Notice how we have an area of support. Support down here, resistance right here. We're floating in the middle of space. Why would you want to buy in the middle of space, right? This right here, it completely makes sense because we have an area of, or let me not say area, but zone of obviously support above this general area right here. You have the resistance. It all perfectly lines up to look for sells. Market structure, everything is correlating to the bearish side. But notice how soon after price did this, created a new low within the markets. You can argue and say that this is going to be the new high, whatever, yada, yada, yada. But we still have to anticipate this pullback right here, or price just blows through this level. If price blows through this level, cool. Market bias flips off of the weekly time frame, right? If you want to look at price structure a little bit differently, lower low, lower high, lower low. Like I said, breaking structure. And then what did this high do? Create a new lower low within the markets. Guess what? This is going to be our new protected high because this impulsive leg, this impulsive move created a low within the markets, wiping out the previous lower low, right? This is all just a valid fucking retracement, right? Price came up, tapped into this general area of resistance. I can definitely expect price to bleed from beyond this point, right? That's going to be another idea on US30. You can very easily take these swings all the way down to here, fucking get an FTMO account, get a my Forex funds account, risk 1% on this trade setup, 2% on this trade setup, look to hold it for about a week, 2 weeks, 3 weeks, and literally pass your account within just a single trade. You can wait just a little bit more. Obviously wait for price to come up just a little bit more into this general area of resistance, or you can go about just taking the trade setup as is because this is a daily pin bar. If it respects these previous daily highs, you can look to set your stop loss right around there and look to set your stop loss up right around there. And like I mentioned, target all the way down to the previous lows, 1 at 18 right there. If you were to lose this trade setup, guess what? You just take your second trade right where your stop loss is at, and guess what happens? you still have the same fucking risk to reward. You lost one trade, boohoo, you're making 17R, right? So it all just goes about how you want to look at the markets. Like I mentioned, you can very easily take this trade setup, risk 1%, make 18%. If you were to lose this trade setup, come into this trade risking 1%, and you make 17%. 17 minus 1, you're still fucking up 16% of your trade account. So that's 2 ideas on US30 that you can very easily take. I literally just gave you guys exactly what I'm going to be looking for. And fuck it, I'm going to be posting this on the community lounge, the public chat, because I really want people to get value out of this. Like I mentioned, I don't really give a fuck to charge people in terms of what's going on. I mean, this is only a weekly breakdown analysis. There's still going to be people who somehow fucking blow their accounts off of this, but it's completely fine. But that's going to be US30. US30 is going to be on the top of my hit list just because of the fact that we obviously have the best risk reward on this. It's either a 1 to 15 on this or a 1 to 6, 1 to 7 based off of this, right? I'm obviously going to shoot for the best risk reward. Overall, I'm expecting the stock market to continue to crash, so I'm going to be eyeing US30 a lot more. These are the type of trade setups that I definitely like risking 2-3% on a live account. Obviously when the conditions are right, but that's going to be US30. Coming down into GJ, I'm very much so bearish now ever since we broke structure right here. If you guys remember from my weekly breakdown analysis prior to this week, you guys would remember that I mentioned that price broke structural levels right here. At that point on, I'd only be looking for sells. Notice how price came up, create a high, higher low, higher high, higher low, higher high, because this impulsive move broke this high right here. So higher high, higher low, higher high. What did price do? Impulsive move, broke structure, retraced. What do you fucking know? Previous structural level of support acting as a resistance, this high, then guess what? Boom, create a new low within the markets. You can very easily anticipate retracements from this point on. Area of interest being right here, which is this general zone, because notice how price hesitated right here, created some sort of a minor area of resistance right here. Looking back at previous history, notice how you have areas of resistance right around that general area. So you have pullback zone number 1, you have pullback zone number 2, which I don't really like number 2, but notice how looking left, you have an area of resistance, resistance, resistance. I just don't like pullback number 2 just because of the fact that it's in the middle of this range, and then you overall have pullback 3 being the most optimal entry, just because of the fact that this area where prices are tracing into is a daily level of resistance. Let me show you. Daily structural level. Oh shit. Notice how you have resistance, resistance, resistance. Anytime that price has hit into the general area, it hasn't hesitated to sell back off. Notice how we tapped into the zone and we didn't even hesitate to sell back off. Notice how we have this general area right here. It is the same exact fucking thing. It's an area of resistance. As soon as price can tap into this general area and you can get a good candlestick confirmation, cool, take the sells. But it's as simple as that. It's literally just basing my trade setups off my weekly, daily structural levels. Based off of this weekly, yes, we are bullish, but notice how we are trading back below this general area of resistance. You typically have the market structure shift on the lower time frames before you do on the bigger time frames. Coming down into this daily time frame, you can very easily argue that this can be bullish right here. I can see why it's bullish, but I have reasoning into the lower time frames as to why I say this is bearish. One of the biggest reasons is because of the fact that we're trading below strong levels of resistance, right? And we have respected that area of resistance. That is showing me lots of momentum to the bullish side of things, just because of the fact that if price were to continue to buy back up on the daily time frame, it would have done something like this. It would have respected these previous areas of resistance, resistance, resistance to then act as an area of support right here for the continuation back up. But that is not the case. Notice how price came up, created some sort of a weak retest, and then we just absolutely just fucking nutted from that point on. So what is the probability that price continues with the selling momentum? Very, very, very probable. Now, if price starts to trade up above this general area and we break these protected 4-hour highs, guess what? We broke structure back to the upside because we have the protected high up here. We have a low, protected high, low. And I say this is a protected high because this impulsive move broke this low. Pricing, like I mentioned, it can retrace all the way up to here by missing the fucking previous high by 10 pips. This is still going to be a valid lower high. Price can give you kind of candlestick confirmation right here. Boom, we continue with the lows. If not, price breaks structure, gives you a retest, because notice, if we were to break that structural level, where are we trading back up above? Area of resistance, 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 to give you a retest back into the zone to act as a support to the continuation back up. But that is going to be the entire trade breakdown. If you guys have any questions at all, be sure to ask. Bootcamp is coming up in December. If you guys want to be a part of the mentorship group, premium group, whatever you guys want to call it, be sure to check out the premium upgrade room. This is going to be the only time that I'm going to be opening it up for the year. But yeah, that's really it. If you guys want to level up your trading, finally become a profitable trader, finally pass your funded account, finally stop blowing your accounts as a whole, get the fucking bundle. I will see you guys later. Peace out.